Hey everybody, hey traders, welcome back. Just wrapped up a really nice strategy session, trading 101 strategy session that hopefully will be distributed. It's going to be recorded, it's archived, it's always in my YouTube session. So youtube.com/Chris Pulver, youtube.com/Financial Wars, long form content. I walk through, trading the market up or down. Very good example. I just hear a lot of traders and a lot of, actually requests I get from customer service where I'm being told, that's too complicated, that's complex, that's too much. No, it's not. There's nothing about the way I trade that is super complicated. Um, and I wanted to address that. So a simple trading 101 strategy session that we just ran, that recording will be available anywhere in my YouTube channel. So you can check it out. I'll put that also in my Keep It Serious and Simple playlist, my trading 101 playlist. You can see that. But we just wrapped that up. So hopefully you enjoy that. If some of you were there, that's great. This is some of the notes. And we did all the following. I didn't cover ratio spreads because we'll save that for another session. But we did long calls, bull call spreads, bull put spreads. We did long puts, bear put spreads, bear call spreads. That's making at least the market seem a little bit less intimidating when there's ways to trade the market up, down, and then we can handle obviously some sideways action. Now, here we are watching the markets rip today, right down. This is interesting that the ES has been up from the same lows. We kind of retested. It's been interesting, like a little bit more volatility on the S&P future. So this is NQ and ES. So ES came in and tested the exact low from yesterday, and the Qs did a little bit of a higher low. Now, we're still not above this trend line yet, but I do wonder if the market is able to get there and fade or get there and actually close above. Are we about to see a changing of the guard with this little recovery? So this 6, 7, 8 day sell-off is now being met with Trump talking up the markets. And that's really not an exaggeration. So what was the big news today? Got the markets to rally a little bit this afternoon around 1:30, 1:45 p.m. Looks like we're delaying tariffs for automakers, and market seems to like it. So less friction in the global economy, more hopefully better relations between U.S., Canada, Mexico, which is where these 25% tariffs are getting tossed around for us distributing and initiating as well as being retaliated. And the markets obviously were pricing a lot of uncertainty. I still don't think this market is just making this crazy run to the upside, but I wanted to address a couple things. So currently, what I have running for the day, I have a 0 DTE on for today. It is going to be, if I go to all accounts here, go positions, go to DTE. I do have, and these are all the trades I took today. So trades on SPX this morning, these are profitable. So I had a trade from DPP this morning. I did a bull put combo that's for profit. That's running right now at max profit. I'm not gonna close it. I'm just gonna let the broker close it. There's no exercise. It's SPX, so I'm just gonna keep my 50 cents credit on that one. That's all I really have. Everything else out 26 days, 26 days, 26 days. Lots of trades there. 42 days. Let me go to other stocks here, not just SPX. So there's SPX. I've got Microsoft out 9 days, and I've got a big old rip here with some ratio spreads. March 21st and March 14th, I've got a 380 by 375 ratio spread. So if I do the 380, 375 ratio spread right now, that's up. Kind of good, like 385 by 3. Let me see. Actually, is this a spot to close this thing out? Let me check here. Is this a bonus profit? Okay. So we got a 111. There we go. So it's profitable, but not max profit. So let me categorize this one really quickly. So if I do this as a 111, this is a group 111. I've got the 21st, similar trade, group this together as a 111, and a 380, 375, 370 for April as well. Group this as a 111. All right, so now I can see what I traded it for and what it is running for P&L. So I traded it for $2.30. Right now it's down about $35. More time. If we stay above honestly, if we stay above 370, I'm going to keep the full $2.30. If we stay between 380, 375, that's actually a bonus trap in addition to not getting to sign the shares. So I could potentially make 230 plus $5 for a little bonus trap on that one, which obviously wouldn't be bad. But if we stay above it, I'm still making 230 on this one. I'm making 230 here, 240 here, and $1.20 per contract. So that would be a trade of 2.30 plus 2.40 plus 1.20, $5.90 credit here in the next 9 to 43 days. Not bad. I do that on multiple accounts. Adds up pretty nicely. So a pretty big swing on the day. I mean, I'm up 60 grand in the day, 132,000 on my P&L for the year. If traders have been in my live sessions, my members, I've had some monster swings this week. My P&L for the year, my high watermarks around 195K. It was down to as little as 50K this week. When the market dumped hard on Monday, my P&L was down. And again, I still have some buffer. I still have some profits, obviously for the year. But from 195 to 50K and now back up to 130, that's a lot of P&L swing, right? So what do I do with that? I mean, I just manage my trades. So I closed out some hedges. I pruned some of my positions. I did take a couple small positions off. But the nice thing now is I'm getting a nice flush in buying power coming back. So my option buying power is increasing. I went from about, I'm trying to think like 999, whatever, 990,000, 950,000 to now 1.1 million of buying power. So I'm still sitting around 1/3 of my account in cash, just over 1/3 of my account in cash. So I can still deploy where I see fit. I don't think this market is going to go crazy bullish. I think we're getting some jawboning right now. I think the market is eager to buy a dip, but I don't think this dip is necessarily done. So here's where I'm looking at. I would go back to this structure in here, right around this like 59.90 to 6,000 handle on the SPX. If we stay above that, or we come back and retest it, that is fine. But I don't think this is done. Look, a high, low, lower high, lower low is still very possible. Okay. So if this gives us the opportunity to offset some bad positions, I think we should be looking to do that. Case in point, the timing on this works pretty nicely. Let's get up towards around, let's see if we can tap like 6,000 here. I'm going to go 59.75 for a chart alarm. And that is going to be right inside this, like, I'll go 59.50 actually. 59.50 is right in this window where I think there is some potential resistance. If I go to a smaller time frame here, let's take the 4-hour chart. I would watch this trend line. If the bulls cannot make a convincing break above this trend line, I don't think we really have all systems go to the upside. I don't think we're there yet. So my concern would be that this flush from high to low was enough that we took out this low and these lows and all these lows. So if the swing is here, that there may be another swing coming lower, right? And I just want to be prepared for that. And maybe I'm waiting too long. Maybe I'm trying to be too opportunistic or trying to too perfect with these levels. But I just want to be prepared. Okay. So today feels certainly a little bit better and different. I don't think by the end of the day, this market is going to be dropping all the way down to my bull put level, which is around 57.05. So as long as we stay here, and even if it chops out for the next 50 minutes, chopping or just melting up, that's totally fine. But this will be a full credit on that bull put spread. What I'm glad that I didn't do was call a top today. So that would have been a little bit more frustrating to see the market, grow up or jump up the way that it did. So bull put spreads for the day have moved really, really nicely. And if you're trading that, you're kind of loving life. Good. All right. So that's that. Let me do a quick spot check on one of my strategies here for members. Let's do waterfall on XSP. This has had about a $700 position swing. So yesterday I was down, kind of worst case scenario, I was down about $1,300. And right now it's down about 655. The trades still need time to work. We're trading at 585. I've got March expirations and April expirations. There's still some time left in the trade. Okay. But April 17th, April 30th, March 28th, April 4th, a lot of expirations here. But, credit wise and profit trap wise, we had a good class in this on Monday. We spent a lot of time talking about this Monday this week, Tuesday last week, Monday last week, and just getting everyone familiar with like what we're doing in the strategy, what we're doing in the service, and why I'm holding the trades that I'm in. So XSP, QQQ, SPX, SPY, I've taken trades, similar strategy with my waterfall income service on all those different assets. Other than that, P&L coming pretty hard today in a good way. So I've got some red in the portfolio, but I've got a lot of green. Tesla's had a big rip to the upside. XSP, nice gain here, over $5,500. Baidu's up. IBIT is Bitcoin, so we got a nice rip on Bitcoin up $4,800. This is all intraday stuff. MicroStrategy up to 304. I mean, how ridiculous is that? I've got a covered call still at 310. Okay. I've got a 310 covered call. I've lowered the cost basis down to like $260 on MicroStrategy, so I'm still just kind of letting this thing do. It needs a little bit more time, but the market is being talked up pretty hard right now. I don't think Bitcoin is free and clear of these bears yet. I think I think that I think I sound like Foghorn Leghorn. I think this market is still trying to figure out whether it has kind of permission and confirmation to go higher, right? We could still be very indecisive in here. We could still have a lot of chop, but it would not be a terrible idea to see the bulls just rip to the upside. If they rip to the upside, could they be blocked again? Yeah, maybe. But it certainly feels a lot better to have that pressure in that rally to the upside, where it just relieves a lot of the pain that traders experience these last probably 6 or 8 days of trading. Okay. So I don't think there's really a lot of issues going on. I mean, this is I accept this. This is great. So big swings. SLV is up today. Silver's up quite a bit. Indexes are up quite a bit. These are a lot of my waterfall income exposures. That's where a lot of these P&Ls coming from. Nvidia up to 118, which is looking better. I do have some shares of Nvidia. They're out to, let's see here. There are, let me double check. I want to say my shares of Nvidia that I do have. I have 100 shares. Got it covered at 135 and a put protection at, what is this trade here? Got the 135 by 110. Yep, I got the 135 by 110, and then I have the 115 by 110 for a ratio spread, and then a 110 by 100 for a credit spread. So this one gets a little in the weeds. Then I've got a bunch of sell premiums on Nvidia. Anything above $75, it just keeps a ton of premium. So hopefully Nvidia is ready to recover a little bit. The next 40 days is fine by me. If we stay above 115, 120, I'm happy. Other profits, JD's up a decent amount. We have earnings today after market, I believe. Today after market's JD. I've got it called away. 500 shares. I got 1,500 shares total and a covered call out to the 21st. It stays above $40. I've got the break even around $45 and change. Let me see. Let me check my exact break even here. So JD. Break even on JD is $35.92. $35.92. Get it called away at 40. $6,100 profit. So I'm not going to chase it. I might roll it if it gives me another. I mean, I've got 1,500 shares. So if I roll it another 20, 30, 40 cents, I don't mind doing that. But I want to see after earnings. If it's up, then I can roll it and grab another week or so out of it. I wouldn't mind doing that for some more income. SPY looking pretty good. I've got a little position here that I'm repairing. The covered call on that one is around 595. Let me go to that account here. So I have the shares. And I have the shares with a collar at 595 by 560. What's crazy is this 560 is actually up a decent amount of profit. I think I'm just going to go ahead and protect this. That would give me, so a 312 debit is trading for, let me see what I can close this one out for. If I close this trade, so I just want to close out the 560. So a 312 debit is trading for, let me see if I can get $7.95 out of that. Filled easy. Okay. So that just lowered the cost basis. 312 to 795. 312 minus 7.95. It just lowered my cost basis by another $4.83. I will take it. Okay. So now current position is 584.72. Closed. Put side of collar. 312 debit. Closed at 7.95 credit. So $4.83. So the break even now, 483. minus the $584.72. So 579.89. Not bad. 579.89. Boom shakalaka. Okay, so now on my own shares, so own shares there, plus on the call side, I've only collected about 61% of that covered call. 595 still a bit of a stretch, but timing this wise, like I'm just gonna let it do its thing. You know, I mean, if it gets called away at 595, that is a decent chunk of profit. So 595 minus 579.89 is a $15 winner. I only have 100 shares, but it's a $1,500 repair. The trade originally started out with a $300 loss. And so if I take on the 300, it was $330 was a loss, and I can close it out for $1,500. I'll take the net winner, right? What is that? 1270? 1270 net profit? Nope, 1170 net profit. 1170 net profit. I'll take that instead of losing $330. I'll make $1,170. I'll take that as a successful repair. Okay, so yeah, a little bit of everything. I did go through. I don't know if anybody has Tasty Trade. If you do, one thing that's very helpful. I do this all the time, but usually once a week I go in and kind of meticulously comb through the portfolio with all these accounts. And what I'll do is I will go in and group my positions. So when I trade a lot of similar assets, like some of the trades just like underlying stock with some options. But when I go into a stock I trade a lot, I will label it. So Waterfall, I'll label that. That's a service that I run. MicroStrategy, that's just a trade. I've got some shares and I've got a bull call spread. NVIDIA, ratio spread, I labeled that one. Qs I did. Let's go SPX. I'm labeling all these things, right? Waterfall service, daily profit play, bull call, bull put combo, waterfall trade. SPY, waterfall trade. XSP, lots of waterfalls. Again, just a service, but just a style of trading. But it does help me keep things organized because if there was no label here, the nice thing at a glance is I can see this. This is the trade. This is what I collected. This is a net credit. So I collected 48 cents. Here I collected 53 cents. Here I collected $1. Here I collected 64 cents. So if these trades go according to plan, that wins, that wins, that wins, that wins. It just adds up to net credit when it's all said and done. So another one down here for 48 cents, another one down here for 63 cents, 68 cents. So yeah, it's just nice to organize it. The way you do that, if I were to take, all you do is this. If you highlight, let me use an example here. Let's go, I'll just do this in another account. Let's go NVIDIA. NVIDIA. So if I do a this $70 put, all I did is went out to the end of the year and said, I think this is going to stay above 70 bucks. So I can just do here and group this. So I'll group the position and just call it a naked put there. That way on that particular trade, it shows that I collected $3.45 a premium. Right now that trade's already up 20%. Okay, August 15th. This one is all by itself. That's another naked put. I collected $3.45 in that trade. Okay, it's already up 19%. This one for June 20th. This is a 111, or what the fudge is this? 212. What is going on here? June 20th, out 107 days. So I sold 2, bought 1, bought 2. I think when this is all said and done, I basically was trying to do a combo trade. I don't know why that. I'll double check this, but I'm basically selling 2 puts at 75. I'm selling another put at 70, and I'm buying the hedge. So this is a credit spread. That's all right. I'm gonna combo this one. This is a wide bull put spread. Okay, and then the $70 here is just a naked put. Oops, get out of there. Let's go $70 to group. There. So in that put, I collected $345. May 16th, another put. This one's only out 72 days, 75 cents, collected $1.32. Naked put. So anyway, point is, it helps me keep things organized. The 135 by 115, this is a covered call on my 100 shares. I have the 135 by 115. This put, by the way, should I protect a little bit more on NVIDIA? It's already up from 427. It's up $300 right now, so it's trading for like $7+. This is a collar trade. So the 135 by 115 is my collar, and then I have a ratio spread 110 by 100. That is a ratio spread. Actually, that's not a ratio spread. This is 135. I did this. Okay, I gotta ungroup this one. 1 second. The 135, the ratio spread is a 115 by 110. There's my ratio spread. Now I remember. And then my 135 by 100 is my collar. There's my collar. There we go. Okay, so now I have my collar trade 135 by 100. That put position is actually upside down. My covered call is fine. I'm just looking to make sure that I have some downside protection on the shares that I own. A lot of ratio spreads, naked puts. I sold a bunch of premium when Nvidia was dropping. I think it's a bit of an overreaction. The stock itself, in my opinion, is still buy worthy. Okay. All right. I see that from Sakib asking about Forex. Yep. Let's go to Forex for a little bit. So are we good right now? Like anyone that's in my services, a daily profit play, we got a 50-cent winner hopefully coming by the end of the day in the next 35 minutes, as long as price stays above 57.05, which right now looks like that's going to be the case. Markets come back and claw back in a pretty nice way. This line doesn't really matter anymore because it didn't call the top. We had a trade earlier today. Daily profit play was really nice. We took a nice winner in here, and then I did it again, took a nice winner shortly after that, and then I just kept in the bull put spread. So that'd be 3 trades, 3 winners on the day. I like that anytime. And then we'll still see like how bullish this market wants to be, good or bad. Currency strength wise today, Euro has been on a tear today. The dollar has been super weak, as has been the Swiss. So actually, I probably got a nice little P&L swing on my Swiss crosses. I'm long Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, and I got out of my dollar Swiss, but I'm long against the Swiss. But Euro is making a big fat move. So dollar index. This is a ridiculous drop, by the way, the last 3 trading days. I'm not mad by it. I haven't really had any exposure to it. The dollar hasn't been something I've been trading a lot of outside of the dollar CAD long, which was closed for profit, dollar Swiss long, which was closed for profit. Euro dollar, pound dollar, no real trades. But the last 3 days, holy shnikes, this thing is starting to make a move. So, I mean, it seems like it's so fast that I wonder if this is going to be new momentum and there's more downside and we just come right back to where this thing started. Or is this an overkill, right? And we're coming right back into all this clustered resistance and support. And this is essentially the low, this is the high, and this is about the halfway point. I'm not sure, so I wouldn't fight this. I wouldn't call the bottom on the dollar. But what I'd rather look for is if you want to get dollar long, it should break that trend line. If you want to get dollar short, then you can follow this structure and go down to a smaller time frame and see if this offers a pullback and another push lower and a pullback and another push lower, and just try to find the structure where we're staying in the direction of this trend and the dollar has made a nice little move, because there is room to keep dropping, right? Question is, are we going to have a move here and then a pullback first and more to come? Or is this going to be a push, pause, and then another push and then another pause, and it just drops with basically like bear flag trades? I don't know. But there's ways to trade it. I mean, right now you're going to see a lot of sell zone confirmation. If I go to a 1 hour time frame, everything on the dollars turned bearish, right? This last little hiccup, we had this, that was a fake out. We had this, we had this. It was like beautiful structure on selling the dollar. And your chunk would be, if you're a trend trader, selling here, stop loss above the swing high, and now you've got profit. You're moving stop losses and you're trailing. and you rinse and repeat that. So as this trade goes lower, if the trade goes lower, what I want to see is, do we come back into dynamic resistance and then roll back into a sell trade? So we can sell here, stop loss above the moving averages, or even a stop loss above this trend line, but I can kind of layer into that trade if the Dow is going to continue to sell off. So find your structure, go to your lower time frames, find your precision, and keep doing work. So dollar index versus euro dollar. Okay. Really, really aggressive move here the last 3 days. So, I don't think that this is necessarily like a stopping point for the euro dollar. In fact, what was the major news here? Positioning shifts, cut longs, bullish catalyst sign. I don't know if this has anything to do with tariffs. Clear confluence, technicals, fundamentals. Okay. Fiscal bazooka. Oh, there we go. So past 2 days, Germany rolled out fiscal bazooka, illustration of what changed. This is what I do. I've been doing a lot of reading and research on this for the beginning of the year. This is why the German stock market, the DAX, this is why the FTSE has been going so well, is that finally, the first time in Europe for a long time, it is now fiscal policy that's leading, right? This is what the US has gotten by with. We have monetary policy that's crazy accommodative. We had fiscal policy for the last 4 years that have basically offset monetary policy because we've raised rates, we've cut rates, and it's been interesting timing, reactionary timing by the Fed. But fiscal policy and government spending has been a big deal, right? Europe has been contracting. Europe is like refusing to spend on anything. And here they are, Germany offering whatever it is. I need to do more research on it, but rolled out a fiscal bazooka. Okay, so Germany's going US style, right? Eurozone as a catalyst, like Germany does it, Eurozone gets a benefit of it, and let's see what happens. German political parties can pull it off, but if they now can't do it amidst the threat of Russia as far right. Great news for Germany is that the euro is it's a one spot, ample fiscal space. This is an invitation to use it. Tariffs and Trump uncertainty thins out the crowded long trade in U.S. dollars. Yep. So dollar broadly lower again today, struggling with both risk on, risk off scenarios. Yeah, Trump is going to be talking down a lot of things. Whether it works or not, we'll see. But fiscal policy is now showing its teeth, and it's hard to catch it, right? You see this move, and you're like, "Oh, I knew that was happening." No, you didn't. I didn't. This was down since 112 all the way down to 102. This thing's down 1,000 pips. I would say what I'm disappointed in is I wanted to see if we could get down to sniff out parity because I would have gotten long back to 105, 106. It didn't come there though. That's the only thing that's the unfortunate side to this trade to me is I wanted to start buying at parity and I would have leveled in for a 105 rally and we didn't get it. We just got to 102 and now it's ripping. So anyway, it is what it is. Now I look at this as if we're greater than 105, if we're above 105, I guess 1.05. If we're above 105, I think this is now, is it good to be bullish, right? Is it running back up to 112? Let's find out, right? Is this all just inefficient moves here for the last 3 days to then stall? And here's what we have to pay attention to. How does it stall? Does it go up and pause? Because that probably means more buyers. Does it go up and violently pull back? Well, that means we got to wait and see. This is still, I would be willing to take a short on this trade if we break firmly below this trend line. But if we're staying above 106 and 105, I think any dips right now probably look good to be going long. That would be following the path of least resistance right now, in my opinion. Okay. All right. That makes sense. Good stuff, good stuff, good stuff. Okay, good, good, good. All right, perfect. I've got to get this one. Got it. Okay. That's it for, euro dollar, pound dollar. We just had a big 3-day move as well. I was looking to try to short the pound dollar, but I wasn't going to short it unless it broke the trend line, which it didn't do. So no short, no longs. I just stay out of the trade. I'm still waiting. I would say, does this go up for 3 days and pull back? Euro pound is probably making a big move to the upside, which I have been long the euro pound. My robot, a nice screaming move right back up to the 200 moving average. So that's pretty good. But euro is much stronger than the pound, right? Euro's on top today, top of the food chain. Dollar and Swiss are weaker. Pound is in baseline. So euro's getting the nudge. Not bad. So other crosses, Aussie CAD. I still like Aussie CAD long. Are we going to move on oil, by the way? Aussie CAD long looking a lot better now. I'm still upside down a smidgen. Aussie Swiss, look at that freaking turn. That's a great turn. All right, Aussie Swiss looking good. I've been holding that one for a while. CAD Swiss turning pretty hard. CAD Swiss is like kind of just getting started. We could take CAD Swiss all the way back into equal highs. I think if it gets here, I still have a measure move, and that support still held really nicely. So, this would be a high. If we take it out, I would just double that move, probably getting up to like 60, 6,500 or so. That's a really nice profit target on CAD Swiss. You got to be willing to ride out some of this noise, but a trade back to 64, trade back to 65 or so. I like those profit targets. Okay, CAD Swiss there, Euro Swiss. Ooh, baby. Now we're talking. Euro Swiss making a run. Got this puppy stacked up. Hopefully some more trades to go. I've got 1, 2, 3, 4 positions long right now. Come on, Euro Swiss. This is just like Dollar Swiss. Just making a run. I've got some leveled positions. I'm going to look at adding more to it. Let me see here. I might add in a pullback trade. Can we get a little pullback here towards like 95.25? Let's go just a little guy for 4990. 95.25, 4990. Take profit's going to be at 98.80. And this is going to be good to the end of the year. Yep, so I'll just look to get in the trade. That's a limit buy trade. 92.25, 49.90 units, 98.80, no stop loss. Boom. All right, so trade is in. Let me see if I can add another one. I like this. Maybe I had to pull back towards like 95.50. I might not get this thing to pull back. I've got a buy stop here, which is fine at 96.50. Let me put in a buy stop at 9,700 as well. I'll do 90. Yeah, I'm going to do 2 more buy stops. So buy stop 96. I'll go 4995. Trade 9675. This is a stop buy 9675. 4995. Take profit at 0.9880. Oh my gosh. There we go. And enforced buy stop there, and then another one at 994, 9700. $9,700, 994, take profit, 9880, and good. Okay, so now that the trade direction is going pretty well, I'm just going to stack up a couple of orders. I like the trade. This is looking good to me to get back up into this resistance, to come back into this yearly pivot, to come back into a measured move, low to high. This is my double bottom. Measure this move, project my profit. That is why I had the take profit right there at 98.80. I can measure this out with, I mean, I can be conservative here, but there's my measured move and take that above. Let's copy and paste that box. So there's my symmetry. So I could see this thing above 9,900. I'm also just respecting that this is a previous high. There's measurement. I'm just giving myself a little bit of buffer to hit my profit target. That way I can just set the take profit, let it take it all in, and let it close for profit. So adding more trades into Euro Swiss, buying above, pullbacks on buy limits, buy stops or above, and just let this thing stack up and build my positions. So that will be a total 1, 2, 3, 4, 5, 6, 7, 8, 9. If I get these all filled, that's 9 positions running, in addition to what I had running from 2022 and 2023. So it'll be a big position when it's all said and done. But I think the price is finally cooperating. Terrence, I closed that thing out, dude. I sent out the alert on Monday for that. I can confirm that. That was sent out Monday. Like in real time, I closed it out for a small winner. ESPR, let me see here. So what's it trading for right now? $1.60. It was trading for $1.50 when I took the trade. We went all the way up to my liquidity level was $2. We got to 186. When this thing moved on the day of earnings, I closed it out for a little winner. So I think my 30-cent debit turned into like a 39, 40-cent credit. I just took the winner. That should have been a 30 cents close out for 38, 39 cents credit. That was on Waterfall, or I'm sorry, that was on Newsbreakers and Double Up. If you're holding it now, I mean, it's fine. It's just a little late. The trade expires in a couple weeks. You can still give it time, man. I mean, if you want to give it time, it was a small risk, but I took the 26.7% winner and just got out of the trade. I'm looking to see when that was updated. I know I posted that. ESPR closed out 1250. Was that yesterday? Or was that today? I'm looking to see. I think it was yesterday. 12:50 p.m. yesterday. Yeah, so that was alert was posted yesterday around 12:53 p.m. Eastern time. Okay. Yep. That's why also with those services, it's like make sure that you are getting the email, the SMS alerts. Make sure you have one-click trading and sending notifications, like something where you're getting alerts. I mean, obviously that's pretty time-sensitive stuff when I'm entering and exiting trades. Not crazy time-sensitive, but enough so that I don't want that question to be like, what happened? Where'd it go? Why I closed out the trade yesterday. So I think that's a little bit too long in between you getting the message now. I want you to get it when I send out the alert. Okay. All right. Any other questions on the currency stuff? I mean, I'm gonna add in more trades to Euro Swiss. I think that's looking pretty good. All my positions Swiss wise, Aussie Swiss, CAD Swiss, Pound Swiss, they're all looking better now. So let's see it. Right, Pound Swiss getting a big old rip to the upside. This is finally happening. So the Swiss basket running hopefully to like 119, 120 on Pound Swiss would be great. Bring it on, man. New Zealand Swiss back down off these lows. That's a really aggressive turn here as well. Lots of upside potential just to come back into, 5,200, come back into 53, 5,400. I mean, you could get a beautiful pattern trade off this New Zealand Swiss and still trade this thing up to these highs. I really like that trade a lot. So I think it's a good trade. All right, just a few more minutes. Market's pretty chill here at the top at 58.50. We're still actually, I know that the market's like all excited today. The week looks pretty decent, but volatility. We're still coming into non-farm payroll tomorrow. I wonder what tomorrow brings. I wonder what Friday brings. If non-farm is going to be good or bad. Nick's in the room here. Dollar cost average euro pound. There you go, dude. And Swiss pairs as long as yeah, I've been playing those Swisses for a while. Yep, it's finally nice to see a 2-year investment pay out, huh? Crazy, right? But no, it's nice. So yeah, Swiss pairs looking good. On the technical side of the markets, I mean, this has been a nice little recovery. I don't think we're done, right? So I mean, you can connect a simple trend line here. I wouldn't be overly bullish until we break this trend line. This is on just indexes. Nasdaq's been a little bit more volatile, but I would say just be careful on just getting crazy bullish. That break or getting back above 515. Just don't get crazy bullish. Okay. It is very true. I mean, it's not a lot, Nick. Honestly, I mean, you know the deal. You get a swap of like 3, 4, 5%. That's about as the most you can make is probably like in the fours. But it's certainly better than paying it. I mean, I say that because in 2022 I was getting charged negative swap on JPY pairs, and I was even getting charged negative swap on Swiss pairs, which really pissed me off. So from 2023 to 2024 to now, it's been nice to get paid about 3 to 4% on holding positions on top of having the pips and the price appreciation go my way. That's ultimately what the double whammy is. Is like I want to get paid on technical direction, and I want to get paid to hold this position. So it's a good problem to have, for sure. I'm just happy that the rates haven't been cut so badly that it's like, well, now they're negligible and the US is back down to 1%, the Swiss is at 0.5%, and you're getting pennies on the dollar. I mean, still getting like, 3, 4% is like meaningful. If all you do is build and hold, I mean, positions get bigger. That 4% on a bigger position pays, and then obviously making the money on the pip side pays really well. All right, Qs, just waiting. I'm a little bit more bullish on Qs above 515. I think the market still has some time to prove it. I think the market still, even if we get back to these highs, I don't know if we're like gangbusters hires or not. I really don't. I think this market is still not done yet. I think that we still have some risk in the markets. I don't think we're just going to job on our way to all-time highs. This week is still an important non-farm payroll, and this market could still be a dead cat bounce. High, low, lower, high, lower, low. The pain might not be done, right? High, low, little bit of choppiness here. One flush lower, then we bottom out. I mean, don't be surprised if the market plays some games at these bottoms. Picking bottoms, picking tops can be very difficult, so just be careful. But looking better. Micro or this is futures market, and we on the right hand side of the trend line. Nope. So the bottom isn't necessarily guaranteed nor confirmed. MES, micro S&P still not confirmed. Qs still not confirmed. NQ hit the 200. It's like it looks like we could have a rally, right? It looks like we could, but what if this is a flush down first? I mean, I have no idea. If it goes straight up from here, congratulations. This market loves the 200 moving average, and off we go. I'm just not buying it yet. And the reason why is mainly this. We didn't hit the 200 moving average. We didn't hit the 200 moving average. We didn't hit the 200 moving average. And we didn't hit the 200 moving average. If I go to Meta, we didn't hit the 200 moving average. If I go to Netflix, we didn't hit the 200 moving average. If I go to gold, we didn't hit the 200 moving average. So I'm not full tilt bullish. I think this is a nice recovery. It feels better than the last 6 days, but I think there's still more technical corrections ahead. So I'll try to position accordingly. All right. Okay. Bitcoin, nice little rally. Is it bullish? No. Is MicroStrategy bullish? No. It's a nice recovery. All this looks like to me is that all this chop in here is just getting found again. Right? So the nice thing is I think at least for the near term, we're putting in at least a recognizable kind of intermediate low that price will respond to. We've had our 5, 6, 7% correction. The Qs were down close to 9%, if I'm not mistaken. So SPX from high to low, we had about a 6% correction there. That was down 6.7%. Okay. I mean, that's not a 2% correction. That's not a 1% correction. That's a 6.7%. That's a dip. Okay. NASDAQ, a little bit more volatile. This one I think got to 9.6, 9.7, 9.79%. Pretty meaningful correction. I'm not complaining, right? So it's a good opportunity. But I said this earlier in a session with Nick and gang and A1 Trading, and I've told members this, like, I am not as bullish on NASDAQ right now. I mean, I still think that this whole idea of rotating out of Mag 7, it's almost like traders finally recognize, like, oh, this might be a mistake. Having 10 stocks be 34% of the market cap might be a mistake. It might be a little bit too crowded, a little bit too concentrated. And you can see that all it took, look, the market itself was down just a little bit, right? 5, 6, 7% corrections, 8, 9% corrections. It's not a monster bear market, not even close. But Mags, just this little 7 stocks down 18%. That was enough to bring the entire index down. Brought the S&P down, brought the NASDAQ down. It spoiled sentiment quite a bit. Everyone's concerned, is NVIDIA going to be all these things, all these speculation things. Point is, it's a lot of concentration. And I almost wonder, again, it won't be the case because traders never learn, right? Stupid traders never learn. But this is your way to get out of trouble. If you felt like you were overexposed or overextended or trading too risky or too concentrated, whatever it is, if the market's giving you a relief rally, you should do everything in your power to protect your profits, thin your positions, and get ready to brace for maybe something a little bit more uncertain or volatile, which is what I will be doing. This is why I was hedging on the way down. I think now is the appropriate time to close out those hedges, which I did. And so this last little bit to the downside, it was starting to accelerate here. And on Monday, I was ready to close. And yesterday, I was ready to close. And I think that's a good spot. Now, I still think the market may end up going lower, but I do have a fresh hedge that I put on yesterday on MES. So I put on a hedge MES, it cost me $500. If we go down, it pays, I think, around $1,300 or better. I think it was like $1,300 to $1,500 profit. So it's another hedge. If it works, great. If it doesn't, I'll sacrifice the 0.25% and the market can go all the way up to the highs and I'll be happy there too. I'll throw this off, throw it in the garbage, and take my smile and run with all-time highs. Okay. All right. Nick, is that really is that really you? That's a trader Nick in my chat that's really really active, and usually I don't see Nick being that active. Let me just ask the real Nick, shall we? I'd hate to see Nick being impersonated on my own YouTube channel. Okay, learn to trade. Yeah, I do. That's why I'm here. So, all right, good stuff. Anything else? Just a few more minutes to close. I think the probability of keeping that 50-cent credit for daily profit play. That's really you. Oh my gosh, Nick. I feel lucky. We're being graced with Trader Nick's presence this morning or this afternoon. Good stuff. I just thought it was a little bit more activity. I'm like, I'm gonna make sure this is really Nick. I know Nick gets impersonated a lot. I know I do too. It's so annoying. Part of me wants to run zero things on social media because of that. I teach traders. We have services and memberships, and it's hard enough just to trade, let alone when you got people impersonating you left and right. I know it's annoying to deal with it. Anyway, yeah, exactly right. Mohammed says Dax is killing me, but being so overbought. So what do you? Why? Why are you shorting the DAX? I mean, come on. What are you trying to do here? I mean, there is the easiest saying in these markets: momentum feeds momentum. Momentum begets momentum. All-time highs are typically followed by all-time highs. Do not call the tops here. Unless you look, if you're bearish on the DAX, then I understand why you're trying to call the tops. Right? But if you are bullish on the DAX, like what the fudge are you doing trying to sell this thing when this has been one of the best performing indexes of 2025? So I'm just saying, like, just see the chart, trade the present. Like, I hope you're not overexposed or you're not in too much trouble, but what are you doing? I mean, this thing has been ripping higher. Like, why are you calling the top? This is good. This is look. The U.S. has been the outperforming market for a decade. The US versus non-US has been like a 3 standard deviation outperformance. Like these are staggering extremes. And this year finally we saw a rotation into Europe, into China, into anything that's non-US is outperforming, and the DAX has been one of the best performing indexes. I get it that's overextended, but this is the only thing that is creating a pullback, right? This has not been a high bar count. This has been a trend that was established since 2022. And we still had an opportunity to buy the dip here and buy the dip here. And this 200 moving average is very simple. So the only thing I see is this. Yes, we're overstretched from a percentage standpoint, but all this is likely going to justify is maybe a pause, right? And this pause is probably met with more momentum. I think the DAX is positioned for a really, really good year. So again, hopefully it's not going to be too much trouble to mitigate some of the risk, take on some responsible losses. But man, I would be looking to add in. I mean, I've been dollar cost averaging into FEZ, which is much cheaper than trading the DAX, obviously. And this is one of the few things I could find that I liked ETF wise. So I just sold some puts. If I have some more pullbacks, I'll buy the instrument. If I get a pullback here, I will buy that at run 54, and I'll see if I can get some upside. But otherwise, I'm just going to collect about $3 to $4 of income down here and do that on 13 accounts. And I'm not going to chase it, but I'm certainly not calling the top here. So anyway, but This is probably the best news ever in Germany right now. It has been a long time since European markets have looked this promising and also this undervalued. And there is heavy, heavy amounts of money that will be going into what could be performing well. This is a monster rotation. And look, it's not like the US market's going to struggle, right? The US market's going to be the US market. It's still the most liquid. It's still the biggest. It's still the baddest, whatever. But the US markets, if we go to slower growth or too high evaluations, it's going to be hard to justify like ripping bull markets. We had a 20+% year in 2024. We had a 20+% year in 2023. If you get out of the way from 2022's correction, the markets from the bottom of 2022 have gone up like 75%. That is a monster run in like 2.5 years. So I think that valuations are still pretty darn high. I don't think that the market with AI CapEx spending can just be like, well, you know what? All these companies are going to make so much money because they have profit margins that are so much higher. Well, if they don't have any workers, if they fire all their workers, look, if people start losing jobs, it's not going to be a good sign for the stock market. I don't care how profitable Tesla's going to be running their entire company could ran with humanoids, but at some point, I mean, look, Tesla's down 50% this year. There's clearly something going on where it's like it's overvalued, right? It's trading at too high a multiple. So that's real. Like the markets find a way to flush out this. They flush out the BS at some point. There's a lot of euphoria. There's a lot of exceptionalism, and the market eventually comes back to reality. So I think, look, Europe is a great place to be right now for investments. China is a good place to be for investments. Take it with a grain of salt. I know it's risky. It's not certain, but money that's leaving the US that's been doing so well for a decade plus is now looking for value. It's now looking for what can grow at a better multiple than just the same old Mag 7, the same old top 10, the same old S&P that's now a 25, 26 price to earnings. That's hard to compete with. That's hard to repeat. And it just makes it where the averages are, you get lesser returns when volatility is low and the markets are trading at really high valuations. It requires a cleanse, a correction, a something. And correction is what we just had. But all that did is put DAX in a better stratosphere where that correction is making the DAX look even better. So anyway, all right. So I would hope that you're just trading it with options. You're not getting burnt too badly. Please don't tell me you're selling DAX on margin. That'd be insane. EEM, yeah, that's emerging markets. Yeah. Yeah. Emerging index. Maybe. But I mean, look, I've shared this many, many times. DAX is a good spot to be. I'm trading FEZ as my replacement of trading the DAX. HSI, this is China. I'm trading Alibaba, Baidu, KWeb, FXI, CQQQ, and JD. That's it. It's a little small basket that represents if China's going up. I think that I've got a 3, 4, 5 stocks that go well. Obviously, Mags, I'm watching to kind of time this out. I'm happy to see Tesla making a bit of a recovery here. I've got some income trades on Tesla that I'm watching. If Tesla, and this is a nice thing, if Tesla at least puts in a near-term bottom, then I get credit here and I get credit here. And those are income trades. And if Tesla goes up here, awesome. Doesn't mean I'm bullish on Tesla. I'd like to be bullish longer term, but I'm not super bullish on it now. I'm just trying to get some income, man. Just trying to get some income. All right. Anyway, think I'm good. Okay. Any other charts, questions? We can take a look at gold. Gold is still, I'm waiting for a pullback. I'm not ready to say gold's bullish. It is bullish. I like gold. I like it a lot. But this to me is also a high bar count with an overextended move. I think gold, if I'm lucky and I'm just going to get this somewhat right, I'd like gold just to stay sideways here. And maybe I'm interested in buying some structural lows. That's still a bull flag. But remember too, like gold to the upside doesn't necessarily mean risk on trading. That's the one thing that's concerning about gold. Like everyone loves gold going up, but why is it going up? It's like building this like anti-dollar, anti-inflation, or it's just not the best environment. So gold going higher is like escalated geopolitical tensions. That's not all rainbows and sunshine to the upside. So I think gold, if we have more risk appetite coming in, I think gold should hopefully drop a little bit more. I'd love to see a retest of this level. I'd love to see some dynamic support. I'd like to still stay bid on gold. I do like gold, but it's a high bar count, and I'm going to wait for it. So, and and if gold, if gold runs to 3,000, I'm not excited to buy more gold. If gold hits 3,000, I'm going to look for this high and this high to become divergence and see if this actually puts in a top. Am I going to short gold? No, but I'm going to buy more of it at a better price. And if I'm dead wrong and gold just goes ballistic, then I will just enjoy the run that I have because I'm in GLD and I'm still in contract or I'm still in option trades and I'll just generate income plus the own shares. But if I'm going to add more to my gold position, I want it to be at a better price. Okay. Final thoughts for the day here for the close. Nice P&L swing. Getting the year back on track, which is nice, and still up a decent chunk for the year. That is around two. So I started the year with 2.6 and up 130. I guess I go 130. All right. So I'm grinding. Back up to 5% on the year, and hopefully more to come. The nice thing is, if we get back to highs, I shouldn't have to hit all-time highs in the market for me to get back to a high watermark. So that's the beautiful thing about having, $20,000 to $30,000 in hedges is that adds to my bottom line and helps me kind of fuel a run that I'm looking for. Okie dokie. I'll let you go. We got one more minute. I'll stick through this final minute with you. And let's go to this trade here. Should be closing for full profit. This can cash settle on SPX today. And there it is. So this is a SPX. Where the heck did it go? There it is. 1, 2, 3, 4. Full credit. Probably going to expire. I could close it out now for like a 5-cent debit, but I'm not going to. I'm just going to let it expire and then settle in for 50 cents. So I'll take the winner there. Nice and organized. Took out some hedges. Closing bell 58.41. Stayed well above the 57.05 and 56.95, which is what I needed. Yippee skippy. All right. Pretty happy on the P&L for the day. Pretty happy come back for the year. This has been quite the interesting week. But what I am liking right now is at least the market feels like, okay, the market can take a breath. The selling pressure is relieving traders' pain a little bit. I don't think the bottom is in. I just want to throw it out there. Like, I don't think the bottom is in. So I think that a relief rally could feel pretty good, but I don't expect all-time highs. Okay. So high, low, a little bit of indecision here that we kind of, navigate a little intermediate bottom. But I think the market could play some tricks on us and maybe have a high, low, lower, high, lower, low. And then we put in the bottom. And that's a little bit more aggressive positioning. Or we have a chop fest here, maybe one flush down, and then look to see if it bottoms out. Right? If I'm dead wrong and this market just starts going up and up and up and up, okay, cool. I'm just going to redo the same thing. It's going to be hedge like crazy, thin out my positions, take on a lot less risk. And if we go to the downside, I'm going to be braced for that because this might be a ridiculous broadening pattern. And this is going to be just chop fest for 2025. Time will tell. All right. Thanks, everybody. Click that thumbs up button for me. That goes a long way. Support the channel, and the algorithm will find my videos and others trying to help traders out there when you're live or just looking for opportunities to join me live or check the video out afterwards. Today, I did host a strategy session at 1:30 p.m. That is on my YouTube channel. That should be recorded and posted. So if you want to check that out, I spent a lot of time talking through. If you're if you're with Nick and the gang at A1 Trading 2, this is a great resource and reference to have. Simply because I just break it down very simply. I just want to look. I'm going to be a little bit defensive when it comes to teaching traders. I think traders need to be open-minded and willing to learn stuff. Look, I'm 20 plus years in the market. I still want to learn new strategies. I still want to, refine and modify what I do to make it better. So the fact that I hear like, oh, Chris, you run the service and you trade, it seems complex. It's like, what are you talking about? If I trade to make money, freaking trade it. So anyway, I wanted to kind of answer a lot of questions in the strategy session and give us ways to trade the market up, down, sideways. So that recording is on my YouTube channel, and you can check that out. But I appreciate y'all being here for final hour, and I'll see you tomorrow. All right, thanks. Bye.